I'm just going to go through a couple of these things, but as you would appreciate, many of these items have been discussed by the presenters before. So I'll sound like a 15-year-old guy in school who's copied notes from my colleagues in class. But who we are simply is IDB Group is a 3-entity organization made up of IDB, which is focused on governments and civil society, IDB Invest, which is where I sit, which is the private sector arm that focuses on a number of areas, but provides loans, guarantees, technical advice, and advisory services to many of our clients, and IDB Lab, which is our incubator area. What do? We offer a variety of financial instruments and solutions, wrapped around advisory services I would have mentioned, but also providing knowledge on a number of areas that are important to the work that we do across the region. And we're divided by 3 sectors. Financial institutions where I sit, covering banks, non-bank FIs, and investment funds. The infrastructure group, which covers energy, not so much oil and gas, but renewable energies, and social infrastructure, water and sanitation, and corporates covering manufacturing concerns, agribusiness, transport, tourism, and telecommunications. So to kind of get into it, why is it really important? And I thought it would be useful to start at this point in time. I mentioned the size of the sustainability gap. The world, as we all appreciate, are facing serious ESG challenges, and these have long-term consequences on our environment. And overcoming them requires mobilizing trillions of dollars in investments. Recent estimates suggest that the developing countries regionally are facing a $2 trillion hole in their annual investment gaps in order to meet these SDGs. These gaps have only deepened since the COVID-19 pandemic, and it's very likely they will increase in the not-too-distant future. So what we therefore have to do is to tap into capital markets, which is critical to achieving this sustainable economic transition in Latin America and the Caribbean. With bond markets evolving, they demonstrate that they can be used as an effective investment vehicle to help close the financing gap by driving institutional and private capital to prioritize the sustainability agenda. So we've all heard about what green bonds are. As Jonathan would have said and the minister would have said, they're traditional debt instruments, no different from your plain vanilla bonds. But the difference is that they're catered and more specifically in tune with creating or delivering on some ESG impact. So green bonds essentially are these fixed income instruments, very similar to debt counterparts, that have positive environmental benefits. Issued by corporations, financial institutions, non-bank FIs, projects, as well as sovereigns to meet their ESG needs. They're core label instruments, so the first one being issued back in 2007 by the European Investment Bank. Back then, they were called climate bonds, but the market has since evolved then. And further to that in that origination, there have been a number of thematic issuances that have come out since then. So the green bonds essentially are within a spectrum of other thematic bonds that do cover social, environmental, transition, SDGs, blue, there are a variety of gender, there are a variety of categories. The main difference is that they are all caught under some sort of standard, and we've heard about the ICMA principles and standards that govern green bonds, but there are a variety of other standards and other modules that persons do follow. So this gives you a sense of what that thematic universe or bond universe looks like, where we're covering essentially a range of bond instruments that meet particular benefits and opportunities and impact initiatives. Jonathan would have mentioned this, but these are essentially a snapshot of the green use of proceeds as identified by ICMA. And they range from what you would expect: renewable energies, energy efficiency, also as well clean transportation, as well as climate change adaptation, green buildings. So I think you're free to use as much imagination as you can into what you'd like to categorize as green, as long as it fits into one of these particular buckets. And Jonathan, I would actually give you this presentation for wider dissemination afterwards for the sake of the audience. But what's also important is the benefits that these green bonds do provide from a market perspective. And in every financial market, there are essentially two players in the marketplace. Those that are the issuers and those that are the investors. So from an issuer perspective, green bonds have the ability to attract new and diverse investor type groups. These new investors are looking for what are called ESG assets or sustainability type assets that are a little bit different from what they're used to, which is essentially investing in companies and governments and corporations. And because there is new demand, demand usually outstrips supply, which means that there is great interest by investors. That great interest likely leads to better pricing considerations and, to use a financial vernacular term, tighter yields at issuance. So issuers get better pricing considerations and better yield dynamics based on this environment. Impact investors tend to hold these investment opportunities to maturity and thus providing stability to bond issuers. So bond issuers are not necessarily coming into the marketplace as frequently to finance these bonds because investors are so happy holding these bonds for the longer term. And so they tend to be very well received by investors, but also by employees and customers of issuing companies. But lastly, issuers can also brand themselves as forward thinkers in this space and innovators in addressing climate concerns. From an investor standpoint, great opportunity to invest in a different asset class. Because the green infrastructure space is in fact growing, and there are many projects that are on the horizon that are currently evolving and always evolving to essentially make this a better place for investment. Green bonds are definitely transparent. There is a higher level of documentation involved because of the annual reporting requirements, but that's great from the investor standpoint because there's always active consideration of information entering the marketplace for better decision making. Capital is directed at the environmental impact projects that green jobs, and it provides green jobs as well and significant climate opportunities. And lastly, they clearly advance the sustainability objectives and agenda in marketplaces. We all would have seen something like this, but essentially thematic bonds are a well-established asset class. Globally, green bonds is essentially the largest share of the global thematic bond market. I think we've talked about the order of about $500 billion being allocated to the market. In all of 2023, $4.4 billion was available or invested in the thematic bond market. And the most active players in this space are those in Europe and Asia. It isn't as commonplace in the Latin American region, which is where we are, but that's, I think, evolving over time. So looking a little bit more at the region, what we see is, as I think the discussion this morning has suggested, that the green bond market is not as developed as other markets. The social bond market tends to be the one that is best used by us, but there is an opportunity for improvement by ourselves. The most frequent issuers in the thematic bond market tend to be the large economies in Latin America and the Caribbean, those being Chile, Mexico, and Brazil. But there are opportunities as well that are taking place, albeit at a smaller scale. And as you can expect, the thematic issuance from a use of proceeds standpoint, where green is concerned, have been focused on renewable energies as a use of proceeds, primarily, but also as well, if I can read this properly, transportation and land use tend to be the bigger areas involved. But the other areas such as green buildings, water usage, land, water and waste adaptation tend to occupy the residual 25%. A little bit of a shout out to what we do and what we've done in the marketplace. IDB Invest as an organization has been active in a thematic bond space where we have to date across Latin America and the Caribbean, we have issued as much as 40 thematic bond issuances, ranging from green, social, sustainable, and sustainability linked. What that means is we have essentially driven as much as $4 billion into the marketplace through a combination of our own account, but mobilizing local and regional as well as international investors into this space. The main issuers tend to be the financial institutions across the region, all of Latin America and the Caribbean. But we see that even Trinidad and Tobago has been an issuer in a thematic space in the past, and that play actually has been Home Mortgage Bank and the Trinidad and Tobago Mortgage Finance Company, now called TTMB. So these are a listing of the bonds that have taken place, not just from a green, but also from a other thematic space. And you'd see the TTM, the Home Mortgage Bank issuance for Trinidad and Tobago, which took place in the marketplace back in 2022, if I'm correct. This just gives you a bit of a sense of the thematic process. It is quite extensive, but not too different from what currently takes place in terms of issuance of bonds. The main difference is that we are looking at one important feature, a couple of important features, which is the design of the bond framework, which is reviewed by Lisa's team, and I'm quite happy to say that Lisa's team and myself have worked on a transaction with Home Mortgage Bank in the past. But this is an important feature of the bond issuance process because we have to ensure that we don't have the issues of greenwashing arising. So the design is essentially an important feature which they review and they provide their stamp of approval on. And then it goes through their normal process or the normal process of meeting with the the local regulatory standards of the central bank and the Securities and Exchange Commission. At the back end of it, once the issuance does take place, there is continuous reporting that is done back to S&P through the framework as well as to the investors so that they feel assured that the funds have in fact gone for their intended purpose and usage. I wanted to play this, but what I will do is I will skip ahead to just mentioning one quick issuer in the marketplace, which is a Mexican infrastructure company that's in the real estate space. CADU essentially was the first green bond issuer. They listed their issuance on the Mexican Stock Exchange. It was as much as 500 million Mexican dollars. Where IDB supported the financing through use of our guarantee product solution. What's interesting is the impact that we had, and this is how we sort of measured whether we're doing good or bad in this space. What we were able to do is that we were able to essentially build close to 1,600 sustainable housing units where 10.6 million liters of water was saved through the issuance of this green bond. And essentially we would have avoided 2,000 tons of CO2 emissions from the marketplace.